What's going on, guys? I'm doing an update. Pretty good move for the crypto markets this week, and doing an update. This is kind of a series of um, updates we've done on Cardano. So our big picture call was our favorite alt name back in December. I did a video at the 14th, a couple days before basically the low. Actually, I think the video was on the low, and then we added a day later, I think the next day after I shot the video. But the point is, we've had a good run. We've had three separate opportunities to add to it. And then we've been doing our usual add and reduce around the intermediate term in some of these moves. So you can actually compound your results quite a bit more by using our add and reduce method, even though it's had a great run. I mean, we went from 2 to 3 cents almost up to 10 cents here as of yesterday. And I want to talk about what's the plan from here and how to trade it and how we're going to play it. And then also just touch on Bitcoin and a couple of the cycles. Some of the stuff we've been going over in our members room, but I think it's worth going over. So here's our entry. It had to do not with price and trying to pick bottoms. That usually doesn't work. We had to do more with cycles and where we were at and what BTC was doing. But we've liked Cardano for several reasons. I kind of highlighted that in some other videos. And what I care about now is just trying to illustrate how we play in this move and the importance of keeping a core position and not letting what I call your emotions or taking yourself out of the trade. You want to let the market take you out. So this, who knows? I mean, crypto, this could go back to $1. It could go to all-time new highs. It could, anything's possible. But a lot of times you start a new move like this, you have a good breakout, and we're up 200% off our low buy. Here, I'll just show that for everybody. 200% off the low buy, right? And after a type of move like that, it's easy just to say, I'm all out, go to cash or go to the next trade. But we've seen in these markets, I mean, it's easy for something to go 10x or a lot higher. So what we want to do is not decide when to get out, let the market tell us when to get out, or let the price action tell you when to get out. And what I mean by that is we institute our trailing stop methods. There's several different techniques you can use. You could use a bar by bar, you can trail an 8, you could trail a longer term moving average. That's our least favorite. What we like to do is use what we call a pivot stop. And the way that works is just to basically show it real quick. You want to identify where the trend changes, and then you just stay with that on a core piece until that changes. Thank you. So you move up, pull back. So within the trend, what we're doing is let's say this is our original stop. Once we move away from it, you come back, right? Pull up, come back, all right? So when you move away on these ebb and flows, when you create these pivots, we move our trailing stop with the trend. And that's really the best way to stay with the trend long term. All right, so part of this add and reduce is, again, that's a 200% move, 200% return. But when you're in and out, notice how we took profits the second time up after this initial run into 5 cents, and then we added back here what we took, all the while keeping a piece. So maybe, I don't know what it is. If it's 50,000 ADA, and when you have a nice move, maybe you take half or you quarter it. And so what we did. So this first initial move, I probably could have took here. I mean, we're up 78%, and I didn't. Mostly because I didn't have my second add on yet. This was only our first add. A lot of times when the market comes down, when you're going contrarian, guys, when the market's coming down like this, the way you buy into a downtrend is not get aggressive on the lower lows. You want to enter over several lots. And they're patient, All right, and so this was only the first lot we got. So on the first push, I'm not really interested in taking profit. When I get my second lot on, that's when I wanted to take into that next area. So that was a 70% move, right? Our second buy combines for another 30%, and then this last run was nice. That was another 100%. So you got an add here, 100%. You got an add here, 30%. You got the first move here, 70%. And then while you're keeping some of your buys for this whole entire move is up 200%. So you can really compound the returns even more when you're adding and reducing instead of just enter, setting targets. That's a very amateur way to trade. All right, so from here, I think what's important is we go to the higher time frames, and then we'll look at the cycles also. So notice, I mean, there's just so much room to the upside on this. A lot of it's going to obviously have to do with how BTC trades, but I don't have resistance on Cardano until more like 19-20 cents. That was where we had initially had a pretty good low from 10 cents, basically doubled. So that's really the only resistance I have. There's a little bit right here, and I guess you could say the lows from June kind of produced that 11-12 area. There's some resistance there. But notice how the daily cycle has been hanging out high up here. So we're going to stay long, but these pieces that we took profits on the next pullback, we actually want the pullback from here. That's what we call our gift zone. So if you combine these moves right here, this is a wall concept I teach my traders, but when you combine this move into one giant candle, 50% is kind of where we'd like to start buying back. So on a pullback, that's just a rough zone or area. It's a technique we use just to get a ballpark for where we want to start buying. We don't want to be chasing up here. This is where we're taking profits, and then the next pullback with the cycle, this is where we want to be buying. Okay, on a scale into a zone, but this next pullback is a buying opportunity. No mistake about it. It's going to be more of the same on the 4 hour. More of the same on the 4 hour. I like taking here into this push. You had nice angle and distance, and then this next pullback. I'll probably start back in the 7 cents range, and then get heavier into 5, 6 cents, all in this 200 pi area. And then on the weekly cycle, you can see that that's pretty high. We've come a long way from. This is part of the reason why we were looking to add, and this was one of our favorite longs, was because the cycle was low on the weekly coming into December and January. So a good move. I think there's a lot more to come here longer term. And don't be afraid of a pullback. We want the pullback to add. If it just keeps running from here, we're not going to make as much money. You want the pullback to add more, and then another move. And then if we look at BTC, overall BTC, everybody's looking at the same stuff, guys. 6,000 is the big level on the up. Okay, that could very easily contain the market. This weekly cycle was low. We kind of put a little bit on, and then now on the next pullback, again, this is where I want to start to increase my BTC position. So we've had a lot of cash on the sidelines as far as crypto, and I want to start to add that back to BTC and actually trade around some alts versus BTC, trade some of those charts. So we're moving from a higher dollar position or a tether position, and then we want to start accumulating BTC now. All right. So the next pullback is buyable. And what we care about on the upside now, you have pi on the daily is 5,400, and then we have that 6,000 level is pretty major. I think everybody has the same thing. Now, when we look at the cycles, this is a long video, but I'll just hit on this real quick. I've told my traders that coming into the end of April is going to be really important. You kind of have a confluence of 2 cycles, really 3 cycles. So this longer-term sine waves, there's different types of cycles. There's an oscillation that we use, which I was highlighting earlier, that has to do with price. It's cycling around price. This is more of a time fixed wave. It's 8.6 count, which happens to be a derivative of pi. The global business cycle is on 8.6 frequency as well. I've talked a lot about that, but the highs were here 8.6 months later. We never got a higher high with the bottom of this cycle, so that just kind of put us into a flat to sideways, no breakout, no new long-term bull market, because we couldn't turn on this cycle. All right, so you notice this is a lower high, lower high, lower high here with the cycle, more lower highs, and then we went into this base, and we essentially broke down on this turning point here. The market broke down. So it's been a down cycle into here. At this point, we were looking for new highs, still didn't get it. You cycled to here, didn't get new highs. But now notice, guys, on this side of the wave, we're coming in here. This is what I mean, end of April. If we can start to make higher highs, then the market has a good shot at a bull run into this time frame. And now notice also here on this wave, we started to turn the corner. So this is about turning points. And we actually rallied here right in line with the top of this cycle. So there is a much higher probability now that we're going to start a new upturn. What I want to watch, though, is that 6,000 level. Can we get above 6,000 with this turning point? If so, we should rally. And it could be a significant rally because this cycle is a pretty long wave. It's 8 months. If we rally up and fail at 6,000, which we could easily do with this turning point, then guess what? It's probably down to more sideways price action until we get to this point in time. And then we'll see where we're at. So we still haven't quite made that major breakout. 6,000 is above the market, but this is a great intermediate term new uptrend. So it's buyable. We want the pullback. We were in alts earlier, and now we want to add more to BTC, but we'll also be selling and taking some gains in front of 6,000. All right, and then we're going to watch the end of April here is a pretty big key point as far as time. Guys, next week I'm going to be doing a webinar on Wednesday, and I'll put some information maybe in the bottom of this video. You can sign up. Some of you don't know I have an ebook that kind of explains some of these cyclical concepts. I'm going to put together just a simple funnel where you can get the ebook and then sign up for the webinar. Again, I'm shooting for Wednesday, so hopefully I'll have some details on that. If not, you guys come join us in our chat. Jenkins Risk Management is their site. We have a free chat room to come on in. It's a real simple sign up right here. That's probably the easiest way to get involved with us. You can, ask questions. And then I have several trading services here also. And I'm not going to go into those right now, but all right. See you guys hopefully in the room, and have a great weekend.